Being here today. Probably as you know, I love these kind of Saturday events. Markets are closed and we kind of kick back. But today, what we're going to do is dive into kind of how to use seasonality trends and using spreads, option pairs, and how you can go about, combine all this to really make a great trading process. So, if something keeps happening over and over for many years in a market, wouldn't it be really great to be able to identify and use this kind of information that could really benefit your trading and have you a lot better success in your overall trading. Now, the big hedge funds, they know all about this, but you should too. And once you do, it's going to be easy for you to use this information to increase your own trading success. So it's something I've been using for many, many years, and I'll tell you a little bit more about that in a minute. But it's also stuff that anybody can use once you understand the source, the information, and how to go about putting it into your trading. So it's some really great stuff. So a little background on myself. I've been actively trading the markets for started back in the 80s on the crude oil side, and was fortunate enough to get in with a company called Coastal Corporation that would actually train you to trade crude oil and oil products and stuff like that. So was able to get into that program that they had. Sent me down to one of the refineries they had in Corpus, Texas. Spent about 3 months down there, just kind of learning the fundamentals of crude. How they take it into the refinery and tankers, process it, make gasoline, fuel oil, things like that. So it really kind of grounded me as far as that. Then went into the operations group, shipping, and all that, scheduling and doing tankers, which was a really fantastic experience. And finally got on to the trading desk and on the cargo side, and sent me out to Singapore for a couple of years trading products and crude out there, the Asian crudes. And then in the mid 80s, got a really fantastic opportunity, went to work for this company at that time. It was Trans World Oil. It was the largest oil trading company in the world. It was Trans World, Fibro, and Mark Rich. And so we were really big on the energy side, but we were also in all the other commodities and things like that. So went to work for them, spent about 17 years there, spent about 16 of those years in Bermuda, which was their corporate headquarters, and ended up running the international trading desk out of Bermuda for 10 years. So that's really where we traded, we traded everything. We were all the futures contracts, foreign exchange, and that's when I started trading options back in '87. But long story short, the one big thing that we would do every year, I'd have to put my trading plan together for the guy that owned the company, and we'd have a big meeting, go over trading plans. And so all my trades, my trading plan at that point in time was based on seasonality. So there are certain things that would happen on the energy side over and over, year after year. So we really, spent a lot of time looking at seasonals, and that played a huge, big part into our trading in general. So that's great stuff, and stuff that you can use as well. So for the smaller retail traders like we are today, but it's good stuff to know. So again, thanks for being here. So the following workshop today is purely for educational purposes. Any stocks, options, or futures mentioned does not constitute advice and should not be construed as a recommendation. Now, by using seasonality tendencies in trading, it's designed to anticipate future price movement rather than constantly reacting to the kind of endless stream of a lot of times just contradictory news, a lot of noise in the market. So, there are numerous factors that affect the market. Certain conditions and events occur, though, at a kind of annual intervals, and these will affect the markets to one degree or another. Now, the most obvious is the kind of when we look at annual cycles, like in weather, from warm to cold to winter and warm back again. So we're currently going into that winter season now. So, for example, when we look at commodities typically will react or reach peaks or lows during certain times of the year. Now, this is due to, either, kind of production cycles, buying cycles. Commercial users around the world will have different cycles as to when they want to restock supplies, kind of get off excess supplies, things like that. So there's going to be times during the year when your supplies are going to be at their highest and demand at the lowest for certain, market commodities. Now, these are kind of the general trends, but there are some other, variables that we wanted to look at and determine to use also for market price. Now, whether you're trading out their stocks or commodity futures or spreads, the odds are that seasonal tendencies will, at one time or another, affect what you're doing, and they're going to be one of the best and most consistent tools that you can really use, in your never-ending quest of, for those trading profits and that better trading edge. Now, these seasonal tendencies should be kind of just used as a part of your overall trading process for selecting really good high probability trade setups. Now, many seasonal trends, as you're going to probably see today, will repeat 87 to 100% of the time, year after year, which is pretty amazing statistics. And we'll go through some examples here today. Now, these seasonal trends, when you combine them with directional cycles and tools that you can use that, which I use are momentum flows, this will really create a huge trend trading opportunity for you that can really literally make your trading year. Now, what we used to always talk about catching that big wave. And a lot of times there are these seasonal waves that are coming, and that's what you want to look for and be able to catch. Now, we're going to look through the steps of doing that next. Now, first, we want to be able to forecast price direction. So we're going to do that using momentum. So this is the best thing I've found over my 30 years of trading using technical indicators. I love to use momentum flows to give us a kind of a forecast of price direction, either up or down. So this will really help you with timing your cycles. And then we want to look for spotting that big breakout, that big wave before it actually, hits, and so we can catch it. And that's where the seasonality can really come in to fine tune kind of this trading process. Now, by using seasonality in our trading, then you can kind of look at it as catching that perfect wave. So I don't know if you've ever done, any actually surfing or, wave boards or anything like that, but, when you do that, you're looking for that next wave to come in to try to catch it. So once you catch that wave, then you just want to stay with that trend. So we used to always talk about, let's try to catch that big seasonal trend wave. And literally a lot of times it could actually make your trading year. Now, these seasonal trades may happen only maybe once or twice per year in certain asset classes, but when you're scanning multiple market asset classes, you can have just a bunch of different trading opportunities at all points of time. So you can look at, the U.S. equities, the seasonality there, bond markets, energy, gold, silver, copper, platinum, foreign exchange, real estate, all these different commodity sectors will have certain seasonality trends to them. So step one is we want to look at how to predict price direction. And so we're going to talk about some, tools that I use, directional trading tools there. So what I've done is I like to connect and, combine seasonality for that kind of bigger, broad part, kind of picture of the wave coming in, and then combine that with momentum to help catch and really define the best entry part or time frame into the, that kind of seasonal trend wave. So when we look at markets and time frames, they all trade in cycles. So when we're trading any type of market environment, it's all about, if you look at all your good winning trades or your losing trades, it's all really going to come down to price direction. You either got that right or wrong. And that's where we can use seasonality momentum and then timing, that trading edge to, catch it at the perfect time so you get a good entry. And then once you're in, managing your risk. So the best, trading tools for then signaling price direction and market timing is using and combining seasonality trends with momentum flows. So, basically what momentum is, or momentum indicators that we will use, what they do is they measure price strength or weakness. And when you're doing this across multiple time frames, it really creates a dynamic trend cycle indicator that you can use. And that's going to really help to clarify or identify these seasonal trend price trends earlier before, they're gone, so you can get into them. It's going to really help you to validate the strength or weakness of a specific, seasonal trend. And then once you're, confident about that with your, potential momentum strength or weakness, then you can, help stay in that trade longer to maximize the, profits. So that's how, momentum can be a really great kind of tool that you can use to kind of layer on top of, seasonal trend for catching that big seasonal trend wave. So to navigate, seasonal trends and time market entries and exits, you really need some kind of trading tools that can then help you to identify a market cycle turning point. So what I've done is I've put together kind of a rule-based, system that really highlights the intrinsic kind of rhythm of the market. So when you're looking at different markets, a lot of times you can kind of feel there's a different rhythm or pattern a lot of times to certain, market sectors. And that's what you can use these tools to help you kind of, guide you through these kind of systematic rhythmic type of patterns and trends and cycles. So the system that I will use, looks for kind of repeatable trading things that I like to look at over and over and over that help you to define, the best patterns to trade. And so what I've done is use these seasonal tools, or not tools, but these different trading tools that I've put together, and they're going to be based on a directional cycle timing model that I use that combines momentum flows and then what we call fractal analysis, which is using multiple time frames, and then overlaying it with moving averages to track trend and see breaks in trend. And then really important to also use Fibonacci support resistance levels to identify certain target points for your profit, or exit points, or risk management points where you can use based on Fibonacci. So it's kind of a tools, these tools combined together, then put together kind of a systematic approach that you can use. So step 2 is that timing edge. So again, when you look back on your really good trades or your bad trades, you're going to notice that you got the direction right or wrong, and your timing was either good or bad. Okay, so these are really important for all your profitable trades. So the next thing we're going to talk about is that timing edge. So when we look at using multiple time frames, this really helps to provide that clarity to the overall trend. And we're going to talk about the overall trend being the seasonal trend. So then you can use it for your day trades, your swing trades, or spread trades, within a seasonal trend. So what we're going to look at doing is looking at the longer term time frame, and what we're going to do that with the seasonality. And this is going to allow us to see the big picture, see potentially a big seasonal trend coming up. And then in order to get the better clarity of that seasonal trend or the sentiment that may exist, we're going to look at the lower time frames of various different asset classes. So, if we're looking at a kind of a swing trade, typically that the way I define that is a trade that could last basically a day to 2 to 3 weeks. So we kind of look at the daily time frame there. So, so step 1, we're looking for the seasonality trend, which we'll address here in a few minutes. And then we're looking at our, trading model and our seasonal or cycle model, and we're going to base that, breaking it down on different time frames. So we're going to use the daily as kind of the swing time frame, and then we look at the lower time frames like the 4-hour, 1-hour, 30-minute, etc., to help us then navigate into the general trend we're trying to catch. Okay, so we want to have those kind of aligned in the same direction. So basically, if you think about it, you're never going to get the whole picture of a trend if you just constantly look at one time frame. So that's very important to use kind of a multiple time frame approach. Now, step 3 is then how do you identify and trade that seasonal breakout or that seasonal trend before it happens? So that's where we're going to use seasonality statistics and patterns, and then we're going to use that and overlay those patterns and seasonal stats with my power cycle trading model, which is based on momentum, and then we're going to use spreads and options that we can use to trade these specific trends. All right, so first let's take a look at the market, kind of a market review using seasonality patterns, and then we're going to break this down. So first, here's what our seasonality continuation chart. So this is the March S&P contract for the kind of the E-mini, okay? So these, we'll go back here, you can see 5 years, 15, and 27 years. These are color-coded. Now, when you look at these are, combining the seasonality tendencies or patterns over these different year sequences, okay? And they're measured. So if you look at this, currently we get a cycle low right around the 2nd of October. So right about here. So this is the S&P 500. So here's early October, right? So here you can see the 5 years in red, the 15 years in black, and here's 27 years. So these stats are very powerful. So you can see a beautiful trend up, right? Super strong seasonal trend. Now we're currently right about here. So we tend to get a seasonal high. We're right here, we're currently right about there. And then we'll get a little bit of a seasonal high right here about the 5th of December. So, if you line that up towards the end of next week, and then we get another seasonal kind of the Santa Claus rally seasonal trend up, and that goes into around the 29th. And then you kind of get a kind of potentially sideways, and then you'll get another move, and then you potentially get a big one down. All right, so that is your seasonal pattern. So what we want to do is use this as kind of the underlying support of the market, and then we want to trade that seasonal trend. If it's up, we want to trade it up. If it's down, we trade it down. But that's where we use our indicators and momentum. All right, so that's kind of an overview there. That's the S&P. And then the next one that we tend to really follow is the NASDAQ 100, which is very, very similar on the seasonality as the S&P. So again, we tend to get that seasonal low around the 2nd of October here, and then we're currently right here. You can see right around there currently, and then we tend to get a seasonal high around the 5th and the 12th right in there, and then another run to the upside into Christmas. So these seasonal patterns are based on certain, supply demand functions of the market. You can kind of push it and piece it all together based on what's happening, fundamentals and stuff. But that shows up in these seasonality kind of statistics and patterns, the fundamentals. And here's crude oil. You can see that crude oil tendency is to have kind of a pretty big seasonal trend move down. And that starts, here in the, early part of October. Now, a lot of this on oil is created and caused by, you're out of the hurricane season. So there's no longer kind of that underlying bid once the hurricane season is over, which is typically, in the first part of October. So you can see the kind of the seasonal trend is down, right? So, we're currently right here, and then we get, you get these little bounces in it, but there's not a really strong seasonal trend on energy. The real strong seasonal trend here on energy is typically starts back here in July. So these really kind of help you kind of navigate, what's coming up on the markets, and then you can kind of be setting up a trading plan. So let's take a current look at the market, and this is what I call market top-down analysis. So I like to do this a number of times a week, and it kind of helps you kind of to see the overall market, that was seasonality to give yourself really good clarity on the market. So first, what I do is when we're, back when I started trading oil and energy back in the 80s, we didn't have, technicals, we didn't have charts and things like that. So we did everything on fundamentals. So we would look at the, broad market, the big macro fundamentals, and then break those down from there. So now it's so much easier because we have good trading, data and indicators that we can use. So with this chart here, you can see these are my trading indicators down below, which measure momentum, just kind of point this out. So this is cycle one, lower study one. This is a really fast momentum measurement. And then lower study two is slow to confirm momentum. And this indicator below here, 3, is what we call a cycle reversal indicator. So it shows you when cycles are starting to shift either up or down. So you can see it shifting there, that magenta arrow. And then you can see it shifting up here, starting to cycle back up. And then this combined with momentum gives you a good, forecast of direction. So you can currently see here, this is the monthly, which I call macro, this trend that we're currently in. You can see here it came down to the 21. This was back in 2023. And then we started getting that really big move back last year, right around here in November, okay, currently where we are. Now, it's been a super strong trend. That's the 8 exponential moving average, so just a beautiful trend up. We haven't even had a pullback to the 21 yet, so just a nice trend. So the big macro trend is still really strong and intact to the upside with good positive momentum. All right, so that looks good. So for right now, the trend's your friend. We stay with it. Now the next time frame, kind of top down, I go down to the next time frame that I like to look at is the weekly, which I call the long term. And then you can see pretty much the same, pretty pretty tight trend all the way up. You know, you can just see it tracking that 21 exponential moving average. And again, the momentum helps us to determine price direction or forecast. You can see momentum still very strong to the upside. Cycle one, which is fast, has not really gone below zero except for this one time. That was back here in, what was that, July, I guess, July, August, yeah. And so, but momentum two, you can see all the way through. See that? So since December of last year, we've had positive momentum. So I like to look at that momentum two, and that shows you a really strong seasonal trend up, or not seasonal, but momentum. And then you can see kind of the ebbs and flows of this, but the major long-term trend measured by momentum is still very strong to the upside. So the trend is, you know, you just trade, you look to buy the pullbacks, you know, and then stay with the general trend. And then we flip it down to the daily, which is kind of the medium term, which are the swing trade term. You can see it's been pretty strong. Right here is the 50 simple. So we've had one correction back to the 50 back here, and that was back in, you know, early November, but it held there and back up she goes. So this is where we can, you know, use these cycle indicators to measure the movements up and down, that kind of rhythmic of the market, rhythm of the market. So you can see here, see the momentum indicators started falling off right here. All right, we had a cycle reversal, momentum started falling off right there, goes negative, market comes down, hits that 50, holds there, big, super strong, super moving average. Then momentum starts to flip back up, and we get a move back up. So when we align this with the seasonals are currently up. This gives us a really good way to trade markets using a seasonal trend, you know, stick with the trend and then use our cycle indicators to navigate in and out of a seasonal trend. All right, so that's kind of, right now, everything looks pretty decent to the upside, and the seasonals are to the upside. So you can kind of check the boxes and think, okay, let's, you know, look to buy the dips, that kind of, you know, market reaction. Now, let's take a look at some seasonal trading. All right, so here's some really good seasonal statistics. I'll show you some examples here. And these are the seasonal stats. These are for November, this, you know, that we just are about to end with currently. So here's the, okay, so these statistics are really great. So this is for the, okay, so here's the layout. You can see this kind of table matrix. And so this shows you everything that was listed for November, this past November, which we're about to end here today. But you can go through and you can see there's a lot of different types of assets that this information tracks as far as showing seasonality. You can see here, here's July corn, here's, you know, wheat, here's crude, here's the Canadian dollar, the S&P, sugar, Treasury, 30-year bonds, the Dow, you know, just a lot of different things. So it gives you a lot of different areas that you can trade, and some are going to be things that you like, that you're interested in. Others are, you know, you have no interest, but it gives you a lot of things that you can look at. And then what it will show you is the entry date, the exit date. This is a very systematic seasonal trends, okay? So it's marked on specific dates, and this data will go back 15 years, okay? Now it goes back a lot longer, but they track it over 15 years and just kind of roll it that way. But you can come down here and see, here's your winning percentages. So what I do is I just go through and I want to look at, you know, everything with a high winning percentage. So here's like 93%. Sometimes you'll get 100, okay? So they draw at 85 is where they draw the line in this data. So you can see here like 87% of the time. So 13 out of 15 years, you know, if you'd sold July corn, you know, you made a profit. And then it shows here your average profit and your profit per day, et cetera. So a lot of good stats. So coming up, you know, is just, you can see here was December, the E-mini S&P. So this is, you know, something that 14 out of the last 15 years is a winning trade, getting in the 9th of November out the 7th. So what we do is I use these seasonal tendencies or patterns, and then I use the indicators momentum to help enter the seasonal pattern. So sometimes there may not be the momentum indicators that I use may say, don't take the trade. You know, it's not trending. All right, so this is kind of the overview wave we're trying to catch, but we're going to use the indicators to help catch the wave at a good entry point. And sometimes you may not have an entry. All right, so it's really a great tool, and a combination that really helps. So I just kind of highlighted a few that you're probably familiar with. Here's the S&P futures. So what we'll do is you can use futures, you could use SPX, you could use SPY. Here's like another one, a really good one that you probably trade is the Dow futures. You could use the diamond, things like that. So this has been a really good one. This was a 93% win rate. So the last 15 years, 14 out of 15 winners, one losing year, and then we can go back in and drill down and see all the specific years. So you can see the average profit on this futures trade with $1,521, et cetera. So getting in around the 20th of November out the 1st. So these are very specific entry points for seasonality, but we're not going to use these entry points, et cetera. We want to make sure that it has alignment with our momentum indicators, okay? So that's going to help us have even a better trading edge. And again, sometimes the seasonal patterns may happen early, maybe happen late. So start monitoring these about 20, 30 days out because sometimes they come a little bit earlier, maybe a little bit later, but this is where the data marks it. All right, so here's an example. Here's the Dow E-mini future. So again, you could use the futures or just the diamond. The S&P is perfect. I mean, the diamond ETF is perfect. So you can see here going down to below 93 winning rate, 14 out of 15 years. You can see the average profit on the winning trades here was about $438. The average net profit per trade on the Dow futures, 304. Winners 14, losers 1 year. Now you can come down here. Here's the losing year right there. All right, that was back here in 2021. So you can see the entry dates are pretty much very, very in line with around the 20th and then out the 1st. Okay, so that's the seasonal entry exit. All right, so then you can see your exit price, entry price here. You can see the profit, etc. Profit amount. It'll have best equity, the date that was, the amount of the high equity, so worst equity. So a lot of good statistics to work with in the trading. This is what we'll be using next Saturday. We'll be using this data, and I'll show you how to use it, how to access it, and then how to combine it with the momentum indicators, to help catch the perfect entry and exit. So here's just kind of, showing you the seasonality chart for that. So you can see it lines up right here, right there. That's where it is. And you get out right there. So that's the seasonality. Now, it may be that with our indicators that may get us, we might get in earlier or maybe later because the indicators, we want those to line up and tell us it's an entry or an exit. So the momentum has to be showing us the upside in order to get into the seasonal trend. We're not going to take the seasonal trend unless our cycle momentum indicators are giving us the entry with momentum being positive, so to make it kind of a simple explanation. So here you can see this line here is where it lines up. It's been a pretty strong seasonal pattern, 14 out of 15 years. All right, so then you can see here's, I just put this chart up to show you, here's the futures. Here's like a 4-hour chart. You can see where it got in. I'll just pull this up here, right here, real quick, and you can see this current one. So these are my trading indicators. And again, if you sign up for the course and you do want to also add the indicators, just you can get those for $195 on that upsell that I showed you. So here's the 4-hour time frame. And so I like to use multiple time frames, but you can see right here, this is where the seasonal entry was. So a really good seasonal entry actually right there on the 20th. And our indicators were showing us, good positive, momentum. So this was actually a really good entry. So here you can see on the 4-hour, we had a cycle reversal down here, then we had momentum 2 positive, 1 was positive. And this is what we call a volatility squeeze. So this was a really great setup, not only for the seasonal, but just the indicators that we use were giving us a trade entry right there. So it's perfect. So right here, this was the seasonal entry, so which really aligns with the indicators as well. And it's still in the trade. It's about to get out. It'll get out this next week. But that's seasonality. And if you're in this trade, we would still be holding it because momentum's still strong. So maybe the seasonality gets out next week, but we with the indicators, if it says stay in, we will stay with the trend. So that's kind of how you can combine the two together. So that's the future. But then the easy thing, what we'll typically do is we'll just use the ETF, and then we can use the ETF, we can use the options, and it just makes it really easy to trade it. So here you can see just the ETF. Here would be the seasonal entry was right here on the 20th. And so you can see that was a really good seasonal setup here. Our momentum indicators were giving us an upside move. So there you go. So that was a really good one here in November. Now let's talk about, also we can use spreads again with seasonality, and then again measured with momentum flow. So I like to use spreads in trading. So when we're doing options, we're always doing option spreads, but also pairs trading using spread, pairs trading is spread trading basically. And we can trade different pairs, to reduce our risk and kind of make it more of kind of a directional neutral sometimes by pairs trading. So we're going to talk about that as well. And when I was running the international trading group, most of all of our trades were some type of pairs trade. Okay, so we were long something and short something against it to give us kind of neutralize that overall kind of market risk. So it really limits your risk when you're doing a pairs trade. So we're going to talk about that. And these are also very, very seasonal, as you're going to see. So the question is then, well, why do you trade spreads? Well, spread trading is, basically what we call a market kind of neutral strategy. And it seeks to neutralize, certain market risk. And it does that by taking offsetting long and short positions in instruments that can actually or theoretically, have some kind of relationship together. So, it could be you're long a stock or a security, it could be a futures, it could be a stock or ETF, whatever. So you're long that, you buy that that outperforms the stock, and you then sell short something against it that's somewhat correlated to it. Now, the bigger the outperformance of a certain, security or asset class, the more money you're going to make regardless of overall market direction. So by using spreads, if the strength of that spread that the stock or security you're buying is stronger, and you've got a security sold against it, even if the market is going up or down, your spread can still have a big strong movement, even in a down market, and you're still going to potentially make money. So this is what makes spread trading or trading pairs a fantastic way to make money without the broad market risk, and that's why hedge funds are called hedge funds. They're long short. Okay, so if you get the correlations right, you're going to make money regardless of market direction. So the seasonality just gives you that extra benefit of that strong seasonal trend to use a pairs trade using the seasonal trend. All right, so here's just kind of a simple explanation too. So say, for example, you have stock A and then stock B. They're highly correlated. Now, if this correlation weakens, temporarily, say, for example, maybe stock A starts moving up, it gets stronger for some reason. It could be earnings, it could be some kind of seasonal thing that hits, this specific company or whatever, or this commodity, it's getting the strength. And so it's starting to have a relatively stronger performance than what it's paired with. So stock A starts to move up. Now it's paired with B, and B though is starting to flounder and move down. So this could be a really great pairs trade to exploit that divergence by going long stock A, or whatever security A, the stronger, and then against it shorting B, the underperformer. So you can see here that correlation breaking and really separating, diverging, right? So that's the beauty of a pairs trade. And so even if maybe the broad market's getting crushed, maybe price is coming down over the overall market indexes, but the stock A or security A might still be moving up, B moving down, and that's showing you that how it can outperform even in a market that's going down or whatever. So that's just kind of the correlation that you look for. Now, the other thing that's really cool with spreads is when you think about it, we'll go through an example. You can make money using a spread, basically 5 different ways. So I'm going to show you here in a minute an example of going long gasoline, short crude. So for example, when we get into gasoline season, starts in, July or into, towards the end of December, sometimes we get a run on gasoline going into holiday seasons. Let's say you go long gasoline and it goes up faster than you're pairing it with shorting crude. So if you think about, crude is the basic compound or, is the feedstock for gasoline, right? So you take a barrel of crude, that's your feedstock. And when you process through that in a refinery, then you get, a certain percentage of that barrel of crude will be gasoline, certain percentage will be distillate, certain percentage will be what we call fuel oil. So you can trade these as a spread, a commodity spread. So you can do this with crude, gasoline heat to crude, things like that. These are really cool little things to do. So if you have gasoline starting to get stronger than its feedstock crude, you're going to make money. So gasoline is going up faster than crude, which is you're short against it. Maybe it's going sideways to down, but that's going up, so you're making money on that spread. Or if you had maybe gasoline is starting to go up, but crude is going sideways. So gasoline is going up, crude just goes sideways, going nowhere, but gasoline is really starting to strengthen. Or you could have, gasoline going sideways, but crude is starting to come down, come off. You see that spread widening, right? So you're still making money because you were short crude, it's going down, but your long gasoline was just going sideways, so you're making money there. Or you could have it to where your gasoline is going down, but it's going down more slowly than crude that you're short against it. So gasoline could be going down here, but crude is going down a lot faster. So you're making money in this down kind of trend. Or the big one would be, you get that gasoline really ripping to the upside and crude though coming off. So, it could be something with OPEC is doing something. It could be whatever, which is weak for crude, but we're getting into strong gasoline period, so everybody wants gas. So that spread really widens, and the refiners are making a huge amount of money, what we call this the crack spread. So these are kind of seasonal trends that we can follow with the seasonality for these kinds of spreads, which I'll show you here in a second. So here's, again, the seasonal data. You can see there's just a lot of things that we can look at, for spreads. So these are spreads coming up in December, right? So you can see here's like one, here's, going long July soybean, short soybean meal, and then short soybean oil, things like that, or long gold and short silver futures. Or here's one that I like, here's, long gasoline RBOB and short crude, okay? So we'll take a look at that. So look at this one, 100%. So out of the last 15 years, it's been a winner every year for the last 15 out of 15 years. So that gives you really, something to use and to trade against for high probability winning trades. So you can see here, it marks that it gets in on the seasonality, the 9th of December out the 23rd. Well, maybe you get into this trade, it could maybe trend longer using our trading indicators. We may end up staying in the trade longer, or maybe it ends up, getting out sooner. So that's how we can use it to align with that seasonality. But that's a good big starting place right there. Look at that. And then here's another one. Here's going long RBOB gasoline, short heating oil. 15 out of 15 years of winning trade. And then it'll mark your potential average profit here. Big, huge potential profit. That's your average profit, over $1,700 per futures contract. All right, so these are just really great things to give yourself some additional things that you can look to trade. You've got, here's live cattle. Cattle's a really good one. Here's live cattle versus lean hogs. Just a lot of different, things that you can, use to spread. Here's, cotton, soybean meal. So there are certain things here that you might be interested in, other things you have no interest, but it gives you a wide selection of various commodity future spreads that you can use. So that's one that's coming up in December. And then here's kind of a breakdown. Here's more detail on it. So this would be, going long, the seasonal market getting in on the 9th of December, out on the 23rd. But again, we're going to use our cycle indicators to navigate into the seasonal trend wave and out, all right? But this has been the place to start, 100% winner over the last 15 years. So here's more detailed breakdown of this specific spread trade, or pair trade, if you want to call it that. So it marked it getting in here in the 2023 on the 11th of December, and then out on the 22nd, okay? So here you can see the entry price, exit price. So this was up 1,742 bucks. It shows you here best equity was on the 19th of December. It was up over 4,000. All right, so you can go back and look at every year. Here's 2024. So that was the last year, 2023. Here's entering the 22nd. Here you just come down and look at the list. And so it's been a winning trade every time. So here's the smallest profit was back right here. This year was back in 2020. So this would be getting in right at that end of 2019. So this is a 2020 futures contract, and you see the entry, exit, et cetera. So it gives you all this information. And then down here, you can see the average profit on the winning trades was $1,783, average, profit per trade, et cetera. So these are really great. If you like statistics, you're going to love this kind of stuff. And so here's just the trade, the chart, the pattern. This is gasoline long, crude short. You can see that seasonal pattern, very, very strong. All right, so here's another, just one example of also, how you can use pairs trades just to trade the indexes. I wanted to kind of show you here how this can work. So this was being long the NASDAQ 100 QQQ and short the Russell, okay, as a pairs trade. So this was on the entry on the 6th of March, out on the 19th. So this is a profit per 100 shares, okay? So it was up just on the spread, 5,900 bucks over that. And so here's the spread. Now this is also, and in the course I'll show you how to do this. This is also, doing the pairs trade where you're making this dollar equivalent. So here was NASDAQ's a higher price contract than the Russell. So what this is the spread of one QQQ, buying one share of QQQ, the ETF, and selling two of the Russell to make it more dollar equivalent. So this is that spread. So at this time when it got in, now here are the indicators. So with my trading indicators, my momentum indicators, we also use these for spreads. So here you can see this is a cycle reversal right there. So you'll get this as the bonus indicator. So you don't, this comes with the course. Now these momentum indicators, if you do want these indicators, you can get those additionally. They're, if you look at that payment link, it's $195 if you want to add that to it. But you can see here what the momentum goes positive, okay? And so here is where that spread was entered right there. So it was at that point in time, if you'd bought one QQQ and sold two Russell against it, that spread was $76 under, where QQQ was under $76 per share under on that spread. All right, then you can see how it started tracking and trending up, just a huge move up. And here the indicators turned down right there. So momentum started coming off. And so I just marked it right there. And at that point, it was, the spread had narrowed. It went from 76 under, now it was $16.30 under. So big, huge winner as far as that spread. So the whole market's going to be going down, but QQQ relative to Russell was going up versus the Russell. All right, so here, that's exactly, to give you an idea of how a spread can work. And so here is the, kind of going through the math of the pairs trade. So On the 6th of March, this was the spread, QQQ minus 2 of the Russell was 76 under. And then on the 19th of May, that spread had narrowed and now it's only 16.30 under. So that's your profit of $59.70 per spread, or per share there, or $5,970 per spread. So that's the beauty of it, a pairs trade. So there are a lot of different ways that we can, do these types of trades, trading seasonality. So we can just do outrights, or we can a lot of times do pairs. So that's what, I'm going to really be, showing you in the course next week. Now, here are a couple things here, just seasonality trend trades that, are popping up here down the road. So here's December coming up. So if you're looking at these seasonal trends, and we'll go through these trades in the course, here's one that's kind of starting to pop up. Here's platinum. This looks really good. Look, 15 out of 15 years, it's been a winning trade. So this is going long platinum futures, okay? You get into that and then out, and this, early December out and late January. This has been a big, huge winning trade, over $3,000 average profit. Here are a couple other really good ones popping up. Here's the March S&P, that's popping up, 93% winning percentage there. Here's the NASDAQ 100 popping up, 87, 13 out of 15 years winning trade. Here's another good one popping up, gold. Gold is starting to look really good right here. So these are the seasonal trends that are coming up. Here's March RBOB, just a lot of stuff that we can, dial into. Here's, cattle. Cattle's a really good one to trade as well. Here's 93% winning rate. So, 14 out of 15 years. So cattle. So I'll be, teaching you, how to use this data and then how to trade it using the seasonality, charts and seasonality trends, and then that combined with the cycle indicators that I use, momentum based, to catch these waves. And this will be, for just outrights and also for pairs trades where we can spread different things. So that'll be what we're going to be really getting into in depth next Saturday. So today was kind of overview of that, but this is what we're going to be really dealing with next Saturday, starting at 11 a.m. So you can see here, here's the S&P 500. You can see the data here. So it gets in, marks it around the 18th of December into about the mid part of January. So this has been a winning trade 14 out of 15 years. It had one losing trade here this year. This was back in 2016. That was a losing year, but all the other ones have been winning trades. All right, so this will be one we'll focus on. There's a lot of good stuff that you can then, be working with. Yeah, this seasonal data is a service that I use and I pay for it. But if you, sign up today, you'll get this seasonal data with your membership. You'll get it free for the next 2 months. And if you stay as a member, you'll get it every month as part of your membership. All right, so it's a paid service that I've been using for years and years and years. And here's just the chart on that S&P. So here's marks it kind of when it gets in this period here. So it's been a very strong seasonal trend. Here's that seasonal continuation chart here that you can see for the March S&P. So it tends to get in right there is when it marks it in and out here. So that's the seasonal, but with the markets, things can happen. So that's why we want to use our indicators, because we may, maybe this seasonal trend doesn't happen, that can happen. So we're going to use the indicators to kind of overlay and align. They have to align for a seasonal trend to get into it, if we're going to take it. So it's a great combination and process to use to really, help your trading, what I call that trading edge. 1 second here, I messed this up. Oops. All right, okay. Now, so how can you bring this all together to capitalize on these seasonal trends using the spreads, options, and option pairs? Well, again, this is what we'll be doing next weekend. And if you sign up today, you're going to get this course and all those bonuses I showed you for 50% off. So you'll get it at 167 on package one. If you do want my alerts, you'll get that for 507. I'll show you some examples of the alerts too, so you kind of know what you'd be getting. So the course will start here next Saturday, the 7th at 11 a.m. Eastern. And, we'll go through 2 p.m. or, as long as we need to cover what we have to get done in this first part. And then we'll finish up on Monday, the 9th at 4 p.m. Eastern till 5 or, whatever it takes to get us finished through all the stuff that I'm going to teach you. So again, use that promo link here and that this will pull up the link that you can use. Click on that. And then this is everything you're going to get again. And you'll get this all at a discount of 15% off, which will give you this price here. Why isn't this working? Okay. Trying to get my drawing tool here. Well, let me see here. Sorry about this. All right, anyway, so all these prices are on my website, so you can see where the value comes from. So you're going to get my cycle reversal indicator, my opening range breakout indicator, my Fibonacci price target mapping, which is really important. Everything we do is going to have some kind of basis for Fibonacci for our price targets, profit taker, defense targets. The pairs trading course, really in-depth course there. And then you're going to get 2 months to access to my seasonality vault. And then if you stay on as a member, you'll have that each month, as part of your membership. And then you'll get a 30-day trial to my trading club, which gives you access to my trading room open each day during the week. We'll talk about that a little bit more. Video newsletter that I do every night. And then, you get access to 60% off anything on my website as well. And then we'll do a live follow-up Q&A. You're going to get my futures commodity guide, so another really nice package that you can learn more about futures there. So the full course is going to be, everything will be 167, but you can see the full value here. So make sure that you take advantage of that using that link that I gave you with that SEA 15 small cap to get access to it. And all right, so that's package one. Now then, if you do want the alerts, you're going to get, here we go, it's finally working. If you want the alerts, then it's package two. So basically, if you're looking for more help in your trading, you want to kind of have a little bit more guidance in your trading, this is going to be the perfect package for you. So this will give you all 5 of my trade alert services for the next 4 months. And then with this, the alerts for the next 4 months, you're also going to get my trading club membership for 4 months. Okay, so we'll go through that, but that gives you access to the trading room, my Q&A every week, my video newsletter, etc. So this will be $197, but if you do the promo code today, you'll get this for not $197, but package one. You'll get everything there, but then you're going to get my selective alert trades that I send out. So this could be butterfly long condors. We do a lot of these. I'll show you some examples of the ones that we've just done recently. Or it could maybe be a calendar or counter diagonal. We do a lot of those. It could be a specific butterfly or calendar option pinning trade that we do for pinning trades that, very selective. Or it could be, breakout reversal trades. These are kind of breakout debit spreads or credit spreads or selective earnings type trade setup. So 5 different types of trades that I'll send out through the alerts. And these we use a service that puts it out, Telegram, which puts these things out within seconds when I send it out. So you have access to that. And then there we go, finally working. Okay. So we'll have all, the various ones here that I send out, and we'll talk more about that. And then if you have any questions, make sure to ask. If I miss your question, yeah, it is being recorded. I'll get back to you. Sometimes they scroll off, so I kind of miss your question here. Yeah, the course will cover, doing these types of trade setups also with options. So I'll show you some selective option trade ways that you can do these trades as well. So it's a really good, kind of covers all the different ways that you can trade these seasonal trend trades, either using options, option spreads, or pairs trades. So, again, what you're going to get if you do the alert service, this is kind of what you're going to get in this package. You're going to get this for the next 4 months, the alerts plus the trading club. And again, if you do this package, you can start and stop this when you want, because let's say you go on vacation or you have to go someplace for business, then you can stop this on your own and then start it back so you're not getting hit with the time. So that's what you're going to get there. So again, if you sign up today using that special promo code, it's $507. And so this will be for the next 4 months. And so you're going to get it. If I send out a butterfly or condor, so on Friday, we did a condor trade on Amazon. Earlier in the week, we did a condor trade on Apple that turned out perfect. So I'll show you some examples of that. Or we may do a counter diagonal. We could do a selective butterfly or counter type pinning trade that might be sent out. Breakout trades. These are typically going to be a debit spread or credit spreads, and selective earnings trades during earnings season. So when I send these out with the alerts, you're going to get a specific, a guide for the trade. So you'll get the exact way to do it, what option series to use. And then I'm constantly monitoring these trades for you to tell you, okay, what it's doing profit-wise, or if it's losing, or if we need to adjust it, make corrections, things like that. And then I do a video newsletter at night, which will go over if we set up a trade here during the day, the newsletter will tell you about why it was done and what we're looking for there. The trades are listed and archived. And then every week we do a live and recorded Q&A. So you'll have access to that as part of the trading club benefits for the next 4 months. I do a daily video newsletter. You'll have access, that comes out every day after the market closes. And then you'll have access to big bonus is the virtual trading room. So I've got a trading room. We open at 9:30 Eastern, and for 1 hour, come in, see what we're doing on the trades, or if you have a trade that you need help on, you come into the trading room, and I'll help you out on your trade. Tell you what I would do, what kind of things you could do potentially to hedge it, and then 60% discount. Anything on my website, you'll get 60% discount on everything that I have on my site. So a lot of great stuff and benefits, come with this package. And again, looking at the trade, kind of going through all the different ones we've had. So this is kind of an overview summary. So started this back in May of 2018. The first service was breakouts, and then I've added the other ones to it. But starting back in 18 through Friday, we've had 806 trades closed out, 579 winners, 53 break even, 174 losers, running at 78 to 80% win rate. And again, these are just unaudited, but just a summary of those, win-loss type trades there. And again, make sure to use that link, put in C15, and then you'll get that discount today, either for if you do course package 1 or 2. Now, course package 2, you get everything in one, but you get the alert services as well. So basically, if you back that out, you're getting the alerts, are basically, you can see here it's $197 and then $597. So the alert service is basically $400 for that, of that price. And that basically is, basically you're getting it for $100 a month the alerts, which gives you the alerts plus the trading club. You're actually getting it for a less. You're getting it, for what is that, about less than 400. So, you're looking at $100, around $100 a month in 30 days. You're about $3 a day is you're getting the alert service and the trade club. So it's a really good deal, and very fair, price, fairly priced. So again, just look at this. You can see if you are a member, just go to your user profile and you can see what all your things that you've already bought, so you can double check that. And then I also have a lot of times people, have these bonuses from other courses, but these are just additional bonuses I give you because these are what I want you to use to help your, your trades. Okay, so with this package, you're getting my pairs trading workshop, my Fibonacci target mapping course, cycle reversal, opening range breakout indicator. So these are just additional bonuses that you get. All right, so but the main thing is, you're getting everything for 167, and then you're getting all this stuff on top of it. All right, so that's just to kind of show you emphasize, all the good stuff that you're getting out of this. So here's what we're going to cover into the class. 1 second here. Yeah, we can go over that trade here in a minute, Jose. So first off, we're going to start with part 1. We'll go through the kind of the seasonality trading foundation. So we're going to go through the seasonal stats that I use, how to use those. So we're going to go through the history analysis using these, statistics, and then, using those, the resource I use, how to use it. And then we're going to go through a big part of this is building your list, your watch list of these seasonal trades. So I'll go through and show you how, I set up kind of a watch list, how to build that watch list. Of either, it could be stocks or ETFs, or it could be commodity futures. So a lot of different things that you have access through these seasonal statistics that I use that I'll share with you, and how to use them in the course this Saturday. So these seasonal, all the trades will be then based on looking for that seasonal trends based on these stats. And then we'll be using the indicators to look for price reversals and price momentum to validate the entry of a seasonal trend. All right, so this is a really big important part, is how to use the indicators to overlay into getting into a seasonal trend that's coming up. So this then, backs into then how you catch that seasonal wave using the power cycle trading, directional trading, momentum indicators. All right, so we're going to go through how to use it, cycle reversal indicator, and then these directional trading indicators. Now, if you do want my trading indicators, you can get those as an add-on. They're, $195. You'll see when you check out. So this will give you all the indicators that I use, to kind of help me really navigate these trades. So that'll be the below here, the lower study 1, cycle 1, 2. You'll get the cycle reversal indicator. So these momentum indicators are going to really help you. For navigating the trade. Plus, this also has some upper indicator studies that, show you volatility squeezes and things like that. But these things are really super helpful for all of your trading. So you'll get those if you want to add those onto your card for checkout. And then part 2, we're going to go through seasonal trends and the tools, how to actually do it. So we're going to go through an in-depth review of how to use the indicators, momentum indicators, for setting up these seasonal trend trades. Okay, so the directional momentum flows to confirm trend, direction, and strength, and then how to use the cycle reversal indicator to give yourself a kind of the advanced alert to a seasonal trend setting up. So, if you just look at that example here, let me just pull that up. We were looking at, the diamond gets in, it's going to be coming up here in December. There's going to be a seasonal trade, but it got into this one right here. And so you can see the indicators that I use. I'll show you real quick. We would have been looking at something like this. So here's the 4 hour. Let me pull up the indicators here. So we know that the seasonal trend is coming up. So here's the seasonal trend when it comes up right there. We know it's going to be potentially on the 20th for that Dow diamond trade that was coming up. It was a Dow futures, but we can use the diamond. So then using the indicators, I would be looking over here at my 4 hour and my 1 hour, and you see here, let me get rid of this pointer. I'd be using the a 1 hour and a 4 hour, and you see momentum is starting to shift up. We had a cycle reversal right here. We had a cycle reversal right there. And then look, see, momentum 2 is still up. So the overall fundamental or momentum of this trend is up. And then you're just getting these cycles, on the lower, shorter, faster momentum. You see it just kind of cycling down, cycling back up, but the overall momentum is up currently. So we're looking to buy the dip, basically, is what that's saying. And then you can see here on the 4 hour, it starts, see momentum starts shifting up and it goes positive right there. So the entry, we would have taken it right there. See that? That's also what we call momentum cross, but right there, the momentum was shifting up. Now, so it makes it pretty easy. If we know that there's a big potential seasonal trend, then we just want the indicators to confirm when to get in. So we would have been in right there. So that same day, but right towards the end of the day, right in there, or first part of the next day, right there. And then once you're in, we're going to use these indicators to stay with the trend. Now, when they start turning over, that's when we'll exit. Now, the seasonal trend may exit early, but if our indicators tell us, we may stay in the trend for another week, 2 weeks, could be longer. Okay, so these are the indicators that really help, and you're going to get this as part of your bonus, a cycle reversal indicator, which is one tool that you could just use this by itself, basically. So that comes with the package. But if you do want the other indicators, just make sure to add those to your package. They're just $195, and then you get the discount off that as well of 15%. All right. So that's what we're going to go through. And then the other really important thing is using Fibonacci. So so we go through the seasonality statistics, and then we're going to look for the seasonal trend, and then we're going to help to trade that trend. We're going to use our profit targets. We're going to use Fibonacci price target analysis. So we'll go through how that's done in the course, and then we're going to also incorporate moving averages, which I refer to as automated trend lines, to confirm the beginning of seasonal trends as well. So there are specific rules that I use that we'll go through how to apply those to the seasonal trend. Okay, so we want to use, I call it seasonal trend as the major overview trend, and then we're going to use the indicators overlaid on that for the entries and exits of those specific trends. So that's kind of part 2. And then part 3 of the course, we're going to go through how to use spreads, okay? So using futures and what I call using synthetic options to actually trade. So instead of just, going long short a futures contract, we can also do the same thing using synthetics, synthetic long short. So I'll show you how that's done. So it's pretty cool. And then how to trade spreads, which, the big benefit of spreads also is you're lowering your kind of systemic risk, your market risk is neutralized, but you're also, reducing, lowering your margin costs as well if you do spreads. That's a big thing, when hedge funds, et cetera, which are trading huge volumes, it helps to really lower margin. So go through that, how that works, and then how to analyze all trades based on your margin, which is your capital at risk, and then setting up your seasonal watch list. And then I'll go through some, simple go-to option strategies you could use to go long, short, things like that. So a lot of stuff you're going to get. You'll get the seasonal statistics, all about futures, that ebook there. So that is an additional bonus that you're going to get. All right. So here, here's one of my members that took the course. Said, Jim, he said, "Oh my God, never expected to learn this much in a course. You open up a whole new asset class of trading." Thanks or kudos to the quality and you've shown and how I can drink from the fire hose, because I was putting out a lot of information, so he called it drinking from the fire hose. Lee said, "This was an amazing course, Larry. This stuff I had no inkling about. It was like a graduate school course. Nobody talks about this kind of trade." I've had that comment so many times. I don't think anybody does trade or teaches any of this stuff out here. So hopefully you'll join and you'll find out. So here's what you're going to get as you're part of your package. You're going to get my cycle reversal indicator. Super great tool. This is something we use for every trade that we put on. But this is a cycle reversal indicator. It's based on what we call percentage range momentum indicator. It's got an upper and lower study. I've got this available for Thinkorswim, TradeStation, TradingView. So you can have any of these platforms, one or all. And so what it does, it basically shows you the rhythm of the market. So here's a cycle reversal down. We'll go through how this is used. Cycle reversal up. And so what we're looking to do is we're looking for the big seasonal trend that maybe goes up, and we want these to align to get yourself into the trend. So you may get in a little early, maybe you get in a little later than the seasonal trend, but it'll really help you navigate that seasonal trend. So there'll be an upper study, which gives you the arrow, lower studies, which actually is the indicator. It also shows overbought, oversold, and how that's used. So it's a really great tool that we use for, I use it for every trade that we set up. Okay, you'll get that. And then the other indicator you're going to get is my opening range high-low breakout indicator. And so this sets an opening range, a high and a low, and it's a great tool for breakouts. So you're going to get that as just an additional bonus. And again, Thinkorswim, TradeStation, eSignal, NinjaTrader, that's what I have this tool for. And then you're going to get these additional enrollment bonuses. You'll get my Fibonacci price target mapping course. And this, again, we use, if you've been in my trading room or follow me as a member, that we use Fibonacci, this price target mapping, to set all of our trading profit targets and defense targets. So very important to use this in your trading, but also super important for these seasonal type trades as well. So what this does, it takes you through how I map a price target either up or down, and it combines Fibonacci, moving averages, what I call price action support resistance, and then standard deviation price targeting. This is explained in the course how we use that, and then unusual option activity. So just a great course. And again, this course, if you buy it on my website, this is 197. Actually, it's more than that. I think it's 297. So just a great additional, but it's something that you need in order to be successful, I think, at your trading. So you get that as a bonus, and then you're going to get my pairs trading for market neutrality. So this is a really great course, and we're going to be, I'm going to show you how to do some pairs trades in the course and teach you how to do that. But this is more in-depth course on that, and so you're going to get this as an additional bonus. So this will show you how pairs trading offers you a really safe way to generate returns, whether market is up or down. Best strategies for your pairs trading. How to use and identify pairs using stocks, ETFs, and futures, how to statistically measure pairs trade correlation, resource used for finding the correlated stocks and ETFs, and then how to lower your trading costs using synthetic options, and the power cycle trading model formula for setting up and finding the highest pairs trades. So really super great course there. So this was, I think, $397, but I'm throwing that one in. And then you're going to get 2 months free access to my seasonality trading vault. All right. So this is going to give you those seasonality charts. And so you'll have those for the next 2 months free. And then if you stay on as a member, you'll still get them as part of your membership. So these will show you the seasonal chart patterns that I showed you here. Great stuff. So this is based on 15 years of historic seasonal data. Okay, shows the exact beginning and ending of seasonal trends across multiple markets and commodities. Statistics and timing past seasonal trends, these are used, they start 85% or higher. So these are high winning seasonal patterns that they provide, that the stats will provide you that you're going to get. And it shows you earlier some examples, like here's, you'll get for the so coming out, you'll always have 2 months. So, for December, once December rolls off, you'll have December and January. So you'll have December and January stats coming out. Okay, so you'll get that, these seasonal stats here. Okay, so you have access to that monthly as part of your membership. And then a big part will be also you'll get in package 1 and 2, you're going to get access to my trading club. So if you do package 1, you'll get a 30-day trial membership. And then if you stay on, you can stay on at 97 or other packages. If you do package 2, you'll get the trading club for the next 4 months. All right, so with this, you get my trading room is open every day during the week, 9:30 to 10:30. Come on in, see what we're doing. If you have a problem on a trade or want to ask questions about any of your trades or options or whatever, that's where you can do it. Then I do a video daily newsletter that you'll have access to. Trades are archived, then we do a weekly Q&A live and recorded. Good trader educational vault material, and then discounts on everything on my website. And then this is one thing I really like. Jay, one of my really longtime members, said, reading books is fine, but seeing the actual option trade setup makes a huge difference. And that's something that's so true. So that's something I want to highlight there from one of my members. And then here's if you do want to go to the, you go over here to my Power Cycle Trading site here, you can see that anything on my site you can get 60% off. If you want any of my trading software, you come down here and see all the different things that I have, breakout scanners, etc. And then you click on the buy, and you'll get your members promo code, and you can stick that in, and you'll get 60% off anything on my website. So add it to your cart, and then once you're a member, you'll get your members code. You put that in there and you apply it. You'll get everything 60% discount on everything on my website that's on my website, from any of my courses to my software, all that kind of stuff. So great access. Come over here on the courses. All my trading courses are typically built and designed around options. So Ultimate Option Guide course, synthetic options, breakout reversals, selling income strategies, calendars, earnings, butterflies, Fibonacci. So any of this stuff listed, you'll get at 60% off. Okay, so a lot of good stuff there. And then we'll do a follow-up Q&A. We'll do that probably Tuesday, the day after Monday's course. And so this will be live and recorded, and then you'll have that. Plus, again, remember, you'll get 30-day membership to the trading club. So if you have additional questions, just come on in the trade room and ask away. And then you'll get bonus 6 futures trading commodity guide. So it's got a really good blueprint guide on what you need to know about trading futures. And then I'm going to give you my directional trading model tutorial of how the trading indicators work. So you'll get that, a 67-page guide. And then here's just kind of wanted to give you an overview if you do want to do the alerts. Yeah, so yeah, Schwab, bought Thinkorswim, right? So my indicators, they're all available. I basically modeled these using Thinkorswim, was the platform that I started using years ago. And then, they were bought by Schwab. But these are the indicators you'll get. This is Thinkorswim. All right, so you'll get, if you want the access to my indicators, they're built for Thinkorswim. They're great indicators. It's what I've been using since, basically 2009. All right, I think you'll like them. And then here, let's go over the alerts here real quick. I'll show you some of the things there. So here's a little feedback here. This was Waleed, one of my members that lives in Kuwait. He said, I have to mention one thing. I'm subscribed to a lot of services who send out trade alerts. Some are good, others are not that great. But one thing I'd like everybody to know is when I get an alert from Larry, I do it blindly as time has shown me. This man is dead accurate on his alerts. And here's Dan. He said, you're very diligent and totally thorough with your analysis. That is the foundation of the success of the alerts. Paid for my subscription with the first 4 trades I took with you when I was learning how to trade options. So a lot of members just kind of learn as they go, with the option setups that I send out. And yeah, here's the link again, Barbara. Use this special link here and just click on it. And you should click on it or copy it and paste it. Let me just double check that thing, make sure it should be working fine. All right, so that wanted to show you that. Now, when I do send out alert, a lot of members, yeah, just click on it and then it'll pull that up, and then remember to put in your, C15. So when I send out the alert trades, a lot of members just want the trades. They just do their own thing, but I will always give you an option trade, okay? A suggested option trade that I think is appropriate for the specific trade that's sent out. So when I send it out, I'll give you the entry level, profit targets based on, my price target mapping. And then I'll give you what option series to use. And then I'll talk about stop loss levels and trade guidelines there. Now, I'm constantly updating the trades. If there's something you need to know during the day, I'll send out an alert on that. If we need to do an adjustment, for hedging or risk management, I'll send out an alert, etc. Then trades are listed and archived, so you can go back and look at them. I use a service called Telegram. If I can get here, I'll show you here. So we did, I'll show, whoa, that was weird. I use a service called Telegram. It's super fast. As soon as I put it out, man, it's out within seconds. And if I can pull it up. Oh, so weird, it just kind of, okay. And then I use Telegram, so I'll show you there in a minute what that looks like. And then I do a setup video review of the trade later in the day, after the markets close, of any alert trade that's sent out. You'll get a daily video newsletter as part of the service. And then we do the weekly Q&A, so you'll have this for the next 4 months. And if you want to renew, you can just renew. Access to virtual trading, and you get, discounts as well. So that's everything there. And then here's some examples of some that we just recently did. Here's one that we just actually closed out. This was on Apple. This one turned out to be a max great winner here. This is this is what we call a call condor. If I can get this, is stuck. What is going on? 1 second here. All right, stuck in a clock. There's, bear with me here. Here we go. Okay, so here's the butterflies. Now, I started this service back in May of 2019, and here we are through yesterday. Had 197 trades closed out, 140 winners, 14 break even, 43 loser. We're running about a 78% win rate. And again, these are unaudited, but the butterflies and condors are super low risk, about average loss, maybe 50 per spread on the ones that we lose. But potential rewards are 2 to 1 up to 25 to 1. So butterfly spread of all the different option spreads gives you the highest potential returns of any spread. And we do a lot of butterflies and we do a lot of condors. So that's kind of an overview there. Now here's one that we just did, and we just did this last week. This was on Apple. And if I can get this to turn over, there we are. So this is one that we did Apple. So here's the, what it looks like when it comes out. This was using Telegram. And you can see here that this was Apple. We set this up on the 21st. It was traded at 228.80, okay? So right here, so November 21st. And like I said, some members just do their own thing. They may have bought the shares or just buy calls or whatever. But you can see here it's very detailed. New Apple long trading at 228.80, holding support at the daily 50 simple moving average, daily positive momentum and upside mark cross, so certain indicator I used. Target 1, 232, target 2, 234. says buy one condor, 230, 32, 37 and a half, et cetera. I'm not going to go, spend too much time, at around $85. Okay, so we actually got into this at 82. And then here's kind of an update. There were a lot of updates, but here's one on Friday. It says Apple trading at 235. Okay, so here it went from 2, now it's trading at 235. If long the 29 November Condor, currently up around $167 per spread, 203% return, and close to max profit. Here it was at the end of the day. I sent out this last alert, trading at 237.32. If long that spread, make sure to take profit and close trade. Currently up 168 per spread, 204% return. All right, so that was over 1 week period. So this was the Apple Condor trade, and this was sent out. And so here was the trade entry right there. Again, you can see the momentum that I like to use right here. See momentum up. Here's that cycle reversal. You're going to get that indicator. Here's momentum up. Here's the trade entry right there. And here's where we got out on Friday. So had a beautiful move up from 228 out at 235.74, over 200% return on that trade, and just super low risk. So here was the trade setup. 1 second. All right, so here was the trade setup. We did this, what we call Condor, long the 230, short the 232. So call debit spread, and then add a credit spread on top of that. So it looks like this. I don't know why that happened. All right, and then I'll back up. All right, so our total cost or total risk on this trade turned out to be $82 per spread. Okay, debit cost there, 82. Spread width 250, less that cost. Potential to make 168 or 326% return. That I've got to change that. All right, so this ended up, we made almost pretty much max profit on this trade. So here it was going out. This was Friday, the 29th. It was trading at 235.74 right here. And the spread went from 249. We had, our entry was 82, up 167, 203% return. So that was one that we just closed out. And again, if you done this trade, you would have paid for, this whole course, right? And then some. So that was a great deal. Well, actually, if you did the trailer service, you're almost there. Okay, depends on the number of contracts you did. Here's another one we did just recently. This was the Russell Long put Condor. This is actually a short trade setup that we did on the Russell. Entered on the 14th of November. It was trading at 234.80, and we were out the next day. This was just a really short in and out trade. So you can see here it says new short. Trade at 234.80, cycle high reversal, target 1, 230, target 2, 228, vertical long put debit spread at 70. And then what we did, we adjusted this a little bit later in the day right here into a put condor. Sent out this alert, said to adjust to a put condor. So I told you how to do that. And then the next day we were trading at the 15th. It was dropped down to 228.70. It was trading at 118, 120, profit per spread up 347% return on that. So that was a kind of a quick in and out trade that we did on the Russell not too long ago. So here's that trade, short entry right there, right out there. Here's your 21 EMA, that was our target, hit that and pretty much kind of stopped. All right, so here's the trade setup. You can see the kind of risk profile on this trade. We had the 233 put short the 230, so you put debit spread there, right here, and then a credit spread on top of that. That creates what we call this condor. All right, and then we had the spread width was $300, $3 wide. You see that? Our risk with that, we had adjusted this, and after the adjustment, it was $34 of risk. That's it. So if we messed it up, we lose 34 bucks, potential to make 266, potential to make 782% return. That's why these trades can really, really boost your equity curve fast. And so here's where we took it off. We didn't get max profit, but not too bad. It was right here. It's going out on the 15th. So now it went from 234. It was trading down at 228.48. So the spread went from 34 to 174. So we're up 140 bucks for 100% return right there. Not too bad. That was one that we just did recently. And then here is the calendars. We do a lot of these, okay? And so you can see the kind of the summary real quick here on our calendars. These are sometimes a little bit longer term type trade setups. And let me just, this thing is flipping around on me here. So this is a kind of results here through yesterday. Started this back in June of 2019. So we've had 310 trades closed out, 224 winners, 17 break-even, 68 losers. Winning rate around 78, 80% is kind of what we've been achieving. Again, unaudited, just kind of show you the summary of trades here. And then we've got, here's one that we just did recent. This was a great one. We did this on GLD, the gold. And we've got one setting up here close. We're close to doing another one. So here's one that we set this up on the 19th of November. It's trading at 242.98. Then we made an adjustment on the 21st and did call debit spread. It was trading at 246.48. And then we were out on the 22nd. It was traded at 250. So 242 in, 250 out. This was up $362 per spread, 348% return. So here's just kind of a quick summary. It says new GLD long trading at 242.98, weekly cycle low retracement reversal off 21. 4-hour positive momentum and upside cross, target 245, which was a gap fill area, target 247 by the diagonal. And then we did an adjustment here. All right, so we did this adjustment. You can get kind of, everything's very detailed. And then here was the 22nd. Adjusted long trading at 250.32 if long. The adjusted trade currently at around 362 per spread, 348% return. Okay, so that's, I'm constantly updating these things for you so you know what's going on. And here was the trade setup, got in right there. Here we go. Gosh, where's my pointer? Got in right there, right here, and then out right there into Fibonacci level. So here's the trade profile from that. And then here's the first, when we first got into it, you can see we were right here. We did this as a, started out with a, what we call a call calendar. All right, so then we took profit, partial profit on this. And then when I send out alert, I'll say, take, partial profit. So it depends on your contract size, and then adjust the balance. But here it was just with the original counter that we sold up, counter diagonal. It went from, we had this set up $1.75. And so this went, was now trading at 311, that spread blew to. So we were up $136 per spread, our 44% return. But what we did on this was we adjusted the balance. And so we adjusted the balance into a debit spread, all right, to give us bigger potential profit. And we reduced our risk because with this one, we rolled the spread where we were able to lock in a big, huge profit. So this is what we ended up with. So this was the adjustment sent out. You can see GLD adjusted long, etc. So now it was trading here, going out, we're taking profit on the 22nd. Right there, it was traded 250.32. Now the spread had blown from 104 to 466. We were up 362 per spread. So if you did one spread, you're up 362 bucks. If you did 10, you're up over 3,000, right? 348% return there. All right, so that's one that we did just recently, okay, on GLD. And here was another one that we had just recently. This was on Marvell. This was a killer one. This was on, we set this up on the 11th of October. Marvell was trading at 73.65. Then we had some profit on the 14th, 15th, 25th. And anyway, I'll take you through this. I'm just, quickly, you can see everything here, all the different adjustments and stuff. And then we got into the trade right there. So this was also the indicators, which you're going to have access to if you want to add them on, 195 if you want to add it to your cart. So we got in right here, right there. This is what we call a volatility squeeze. See that churn? Cycle 1 was positive 2, cycle reversal. And then we got out here and here, okay? And this was one that we did a couple adjustments to as well. And, we got out on this one was to show you on the 15th, we had it, was right here, it was trading at 82.02. And we had this calendar diagonal on, our entry was 395 out at 692. So we had a profit per spread of 297, 75% return, but then we adjusted it into a call condor and to a call debit spread. We adjusted this call debit spread on the 18th and turned this into a straight debit spread where we had it reduced our risk and we had a great potential for bigger profit. So we went long. So now we're adjusted to a 77 call long, 85 call debit spread, $8 wide. So we really widened out the spread by doing this to give us a really bigger potential upside. And we had our risk down just to $1.15 with the adjustment. So we had potential $8 wide spread, 800 less our cost to make 685, 595% return right there. So these are the kind of things that you'll get. I'm constantly looking to, enhance the trade either by, capital at risk, return, or we look at theta a lot. So here was the trade, going out. When we ended up doing this one, we adjusted this right there to the 25th October, 77 call long, 85 call. And on the 25th, it was trading at 83.31 from 73.65. Now we had this call debit spread here along the call we adjusted to short that. So the spread we got out, now the spread was at 6.31. Our cost was 115, had a profit of 516 per spread, 448% return. And then just want to throw these in. So this is another type of trades that we'll do. These are what we call the lotto trades. These are butterflies that we do for penny trades. Yeah, here, sorry, John, here I didn't see your question. Here's the link, again, the special link. Make sure to use that, click on it, use that SEA 15. Let me put that in, small cap, and make sure to take advantage of it today. Here's just one more kind of areas that we will do. These are very selective, but this was an amazing trade that we did. This one was a penny trade that we did on a monthly options on Tesla. So this was on the 8th of February, we set it up. Tesla was trading at 189.35. And then we got out on the 16th. It was trading at our target of 200. So this was a pretty much max profit, 231 per spread. This was over a 1900% return over 8 days. So here was the setup. It says new Tesla long binary monthly butterfly option penny setup. It was trading around 189.35. Trade set for potential monthly expiration pin at the $200 next Friday, 16 February. So buy one butterfly. Here it says at around $12. That's 12 cents, $12 was the debit paid, right? Super low risk. So this is what we call binary. So we just risk the 12 bucks. If it hits our target, we make potentially big. If we lose 12 bucks. So here it was going out the 16th. It was trading here, going out, trading at 200, right at our target. Now this butterfly was up $215 per spread on that risk of 12, up $1,791. Now here it was at the close. This is rare. I've never seen it pin exactly like this ever. This was, I said, wow, almost a perfect pin. Actually, it was. So it was trading right at 200 basically. And so the butterfly was going out right there at 230 spread or 1,916% return. So these are things that can happen if you just know how and when to do it. So here's the entry right there on the 8th. Here is where we got out. Here's the trade setup, the profile. You can see super low risk. So this was long, the 197.5, short the 200, short the 200, long the 205. A butterfly. Our cost, our risk, 12 cents, $12. Spread width 250, 250 less 12, potential 238 for spread, 1,983% return, and we pretty much nailed it right there. So here was the, right there, boom. Now what we do, we scale out. I mean, this is, we don't keep the whole, all trade for the last day, but here's where it was, right there at expiration, right at 200, amazing. Okay, so it's up 238, 250, 1,983% return. And again, though we're scaling out, but that's where it closed. Here's another one we did just recently. This was on GLD. So this was another, what we call binary pinning trade. This was on GLD. It was trading at 222.85. And we originally had this one traded, set up for 225, but then we rolled it up for a 230. So it ended up right close to our target at 230. So this was up 203 per spread or 700% return. So it says here again, new GLD long binary call butterfly option setup, trading at 222.85. Go through everything there, what you need to do. And then we did an adjustment here. And then here it was going out on the 16th. GLD long call butterfly trading at 230.50, looking good for a 230 pin, currently up around $200 per spread, 689% return. So that was GLD. And here was the entry right there. Here was our exit right there. And here was this, the setup that we did here. So we were targeting that 230. So we did 227, 230, 233. This butterfly adjusted cost 29 cents. So our risk was $29 per spread, $3 wide spread, potential to make 271, potential for 934% return. And we ended up making 600% return, 700% return. So went out right there when we had an exit, overshot a little bit, but close enough. So went from 29 to 232. So this was up $202 or 203, 700% return. So if you do want the alert service, that's what you're going to get, and that's course package 2. So again, just kind of a quick review here. Use that special link that I gave you. Make sure to use it today before it expires. Put in SEA15 and you'll get 15% off. So you're going to get this Seasonality Trading Bootcamp starting next Saturday. And if you use the promo code today, you're going to get 167 plus, then you're going to get all of these additional bonuses with the course. Okay, so full course value over $3,300, and today 167. So pretty sweet deal there. Hopefully you'll take advantage of it. And if you do want the indicators, just you can add those to your cart. When you're checking out, those are the 195. And then if you want the alerts added on to it, you get everything in package 1, but then you also get the alerts, all 5 of my alerts for the next 4 months. And again, butterflies, calendars, pinning trades, breakouts, earnings, and use that promo code, and you get everything for 507 today. All right. And that pretty much it is. If there's any other questions, let me know. So we're going to crank it up next Saturday, the 7th of December, 11 a.m. Eastern till 2 or however long we need it to do. And then Monday, and then we'll do the Q&A the next day. All right, let's see, what other questions? Yeah, so we'll do the pairs trades using options, and you'll learn how to do that. And then we'll be going, the big thing is, finding the seasonality trades, how to use the data, then how to, set up your watch list, and then, how to set up the trades using the indicators and tools. And then we'll do the Q&A now. Everything will be, live but recorded, and then we'll get that PowerPoint and the recordings out to you probably by next Wednesday. So you'll be, up and running and ready to go. All right, well, that pretty much does it. Any last questions from anybody on any of this? I'd be happy to answer your questions. Oh yeah, sure. Let me show you the what we did. This is one of the alerts trades that we sent out. We did this trade actually. This was Amazon. We did this one on Friday. Not Friday. Yeah, Friday. This was the one that we did Friday. This was Amazon. This was a long call condor. And so certain market conditions and patterns, I like to do this one. And this gives us a very low risk trade, but a good potential, reward to risk ratio that we can use. So here was the trade setup that we did. This was again on Amazon. And so we did this basically looking at this 4-hour time frame. We've got the daily. We kind of stepped out a little bit. Typically, I want to look at the daily, but we had the daily starting to move up with momentum, not quite where I wanted it, but this one we got a little bit more aggressive. We had cycle 1 and 2 positive on the 4-hour series, cycle reversal here, getting a cycle reversal there. Then we had this, what we call a momentum cross here and here. So we took this trade looking for this potential break above the 618 right there. You can see how it's just kind of churning right there. So if we get this break above that 618, then we have the potential to go back up here towards that prior high. So we did this with the what we call a call condor. And let me pull that up and I'll show you what it looks like. But it's a low risk trade, but it gives us a potential big reward if we're right. Okay, so this is the one we just did on Apple. We did nail that one perfectly. So here was the condor that we set up. And again, this was alert trade. I'll show you the alert that we sent out. So we set this up. We bought the 205, 207. So we're long this call debit spread here. And then we sold against it the 215, 217 right there. So we've got that we're short up here and then we're long down here at 205. Okay, so we're long here at 205, short up here. So if we get a move in this area here, we get the potential for big max profit there. All right, so currently this is up a little bit, going out. So we had a pretty decent entry. And next Friday, if we get if it stays in this side, the condor spread here, this will make 151 bucks. So it's about 150% return potential on that. All right, so that's one we just set up, and what I need to do down here. Too many things probably opened. All right, well, thanks for being here, Robin and George. Let me see if I can get that telegram. I'll show you the alert that we sent out here. Anyway, oh, here. 1 second.